Right. Right. All right. So let's review some turning points. The obvious one here is the Dow. I mean, this is a really good market. It's just, I think it's one of the easier markets. Anyway, so you see the accumulation and breakout right here, right? So over here, this right here is also breakout because that's the true breakout. You had some follow through and you had a test. So we want to see what happens on the test. It's all we're trying to do is buy pullbacks. Alright, so I'm going to explain. Your market that rally, let me explain it a different way. And this is basically just a summary of trading, I guess. I don't know what to call it, but basically idea is buying pullbacks. So you have markets, they go up and they go down, and then they go up. Each one of these points here is important. Why? Why is this point important? This point is important because this is where supply overcomes demand. This point is important because it's where demand overcomes supply, so the market goes into an upswing. This one here, this one here, supply overcomes demand, so the market goes into a downswing. When demand overcomes supply, the market goes into an upswing. Then what happens? Then the market breaks out. Why is that important? It's important because demand overcomes an area where supply had overcome demand, but now demand overcomes supply at that same area, creating the breakout, and vice versa for a breakdown. So these are the 2 points. I mean, basically you have the pivot and the breakout. Alright, now yes, the other behaviors that the market comes back, it can climax on the way back down, etc., etc. I don't want to get into all of that. So let's just take a look at what's going on here. What do you know? You see the market went from green to red to green. So that what happened? The demand overcame the supply. Isn't that a good area to look for trades? Why? Because there's only one red bar. After that, green, 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 green. So demand overcame supply. On a test of that, don't you want to see what happens? And that's what you're doing. So nothing more than that. So now we go to the right hand side and see what's going on the test. What is a test? You hear this term a lot. You'll hear test, test, test of a breakout, test of a breakdown, or you'll hear something like forgot the terms, the returning to an origin, or there's a lot of other terms. Alright, the whole point is though the test or the reaction or whatever the whole point is it's going back to a prior area of demand, and you want to see if the demand is still there. There's nothing more to it. Is the demand still there? So the test is testing to see if the demand is still there. Where? In 2 points. One is the pivot, and the second is the breakout or the breakdown. Alright, so in this situation you have a breakout. You have a market that goes up and then it tests. Is demand still there? Obviously, you see on the right hand side, demand is still there. Why is it still there? I don't know. But demand is there and it has follow through. So What else you want? What does that mean? Let me say it that way. It means that it has passed the test. The test has passed. Alright, now this is different than the test, the secondary test after climax, which is a test to see if that demand or supply is still there, but in a different way. Like, if it's in a selling climax, you have a climax and you want to see if that pressure is still there or has it abated. In this situation, you have a pullback to test the breakout or the the low bar or the origin or the order block or whatever you want to call it, and to see if demand is still there. And that's why you clearly see the word demand here and confirmation there. So it's saying the demand is still there. Done. Case closed. Now all that matters now is getting in on the pullback, and the rest is all probability, which means that there's always a chance that on the pullback the demand will evaporate, right? There's always that chance, or that or something will happen. You don't really know. So that's all, and the demand is still there. Comes back, tests that same area, and it's ready to go. And where did it go? It went right back to creek. What? It doesn't mean it always comes back to creek. Where is creek? First of all, creek is high before the low. The high here before the low. That's creek in Wyckoff terminology, or support if you want to call it that, or whatever you want to call. Why? Because that's the break, the area of the break, the breakout, right? So that's where the pressure came, and that's where it tested, and that's where it flew. So, long story short, you're combining three things. One is trend from a higher time frame. Second is level. That level is either a breakout or breakdown, or a pullback to test the pivot low of a rally. And then 3 is that test successful, meaning is demand or supply still there? Again, trend plus level plus test to see if demand and supply is still there. Done. If it is, put on the trade, and the rest is probability it works or it doesn't. That's my 2 cents. There are other methods, there are other techniques, but this is a very logical way. Why do you want a trend, higher time frame trend? It's really straightforward. If you have higher time frame trend, your up waves are going to be bigger than your down waves. Anytime you have trend, that means the up waves are bigger than the down waves if you have an uptrend. What does that mean? The risk to reward is in your favor. So when you have trend, the reward is bigger than the risk. That's the nature of trend. Because in an uptrend, the up waves are bigger than the down waves, so you trade the up waves. And also there's a directional tendency in a certain direction, so it increases the likelihood that price will go into that direction because it's been doing that based on prior data. Anyway, long story short, this is just one way to do it. And you don't really need any special charts. What you do need is to understand trend, level, and see if pressure is still there, demand supply is still there, and a method of entry, a method of exit, both on the stop and the target, and the moving of the stop from stop to break even to scaling, not scaling but continuing to move. Other than that, psychology to ensure that you're able to handle it when it doesn't work. But in this case, I mean, it was very the likelihood is on the upside. Why? Daily uptrend, medium time frame uptrend. Here, establishing uptrend. Done. Okay, thank you. Bye.